The banking space and Union Bank of India. Last week, viewers would remember that they cut the base rate by 10 basis points. So it went down a little bit, the base rate for Union Bank of India. I believe they are second after State Bank of India in terms of where the base lending rate stays. The minimum lending rate now stands at 10.65%, second only to State Bank of India. But how does this augur for business per se? We're at the start of the new quarter. How was the previous quarter? To answer all of that, SS Mundra, ED of the bank, joins us right now live from Mumbai. Thanks so much, Mr. Mundra, for joining in. You know, before we come to the discussion at hand, since we are at the end, since we finished the last quarter, that is Q3, and the start of the new year and a new quarter, just put into perspective, how was Q3? Because, you know, a lot of people keep on wondering about how much further worse can it get for the banking space in terms of NPA problems, so on and so forth. How do you think Q3 has shaped up for you?
Okay, I think before I reply to that, let me also take this opportunity to convey to you and to all the viewers my best wishes for the new year 2012.
Thank you, sir.
Now coming to the Q3, as far as the growth rate of business is concerned, it is on predicted line. If we would recollect, we had started the year with a certain prediction and did some revision midway. And as I see from the preliminary estimates available, those projections are holding good as far as the credit growth is concerned on the moderated level. Now, asset quality, when we talk about, as far as Union Bank is concerned, it was a peak situation in Q2 September, we had mentioned, as we had moved continuous to the system-driven NPA. And while discussing after the Q2 results, we had mentioned that going forward, we expect that the trend would be positive side, and we should be able to contain the incremental NPA, and probably the recovery, upgradation and other things should continue to be more than that, finally resulting into the stock of gross NPA coming down. As I mentioned from the preliminary estimate available to me, I believe we are very much on that track.
Right. And what is the expectation in terms of the lending activity that you see for various sectors? Which sectors do you see drawing traction currently as far as the overall demand is concerned for capital?
Yes, if we talk limitedly in the context of this quarter, and as I had mentioned on the previous occasion also, that demand during the year is continuing on the line of pipeline which was built up during the last year, and that as the project has been progressing, there had been drawdown on those pipelines. And there had been moderate incremental activities in the retail, SME, the traditional segment. Agriculture also, because traditionally in the second half, there are always activities at incremental level. So it has come across from various sectors, not any particular sector or industry which can be, I can specifically point out.
Okay. Why this decision to cut the base rate by 10 basis points, Mr. Mundra? And do you expect further cuts in lending rates?
Well, I think there is not too much to read into it. But let me explain you a little bit of the background. If you recollect that in the banking industry, the last base rate adjustment or hike was mostly in the month of August. And if you also recollect last few months, you would find that the deposit rates were peaking or firming up before the lending rate. And deposit rates had peaked while the lending rate enhancement continued. After that, RBI did 2 repo hikes, and I think largely the base rate remained unaffected. So the deposit rates have picked up, but that was not the time. But in the last monetary policy, RBI also gave a reasonable indication that now it is the time for a pause. And going forward, of course, the timings were not explained, but there could be then the rate cut cycle may start at some point of time. So as I explained that deposit rates had peaked quite some time back, when we took the stock of our liquidity position available, lending activities also taking the stock of that. And we did some revision in our various deposit rates. And as you know, that base rate is a derivative of various components which goes into this calculation, and it needs to be revised every quarter. When we did this for quarter, we found that there is an element of reduction which is there and which can be passed on. That is what we decided to do that. And we would not have done it earlier, but because of the overall monetary policy stance, it was possible. Having said that, I don't say that it means it is a series of rate cuts which are expected, or it may be followed by another rate cut very soon. It will all depend on now in the January monetary policy, what is the overall stance is coming, how the inflation figures are coming, and how the growth is happening.
Okay, Mr. Mundra, then before we wind up, I know you started off the conversation on the premise of how Q3 has been, but just to get a final summation, for Q3 for Union Bank of India, would there be any kind of negative surprises in terms of how the NPA picture would be or how the provisioning would be?
Well, I think, as I said, it's too early. We are on the first day of the quarter. Preliminary estimates are available. But I mentioned in the very beginning that in Q3, we moved everything to the system. In Q2, we mentioned that going forward, we expect that the situation should tend to improve and not getting any further, anything additional coming. And I did mention in the very beginning that we are very much on those predicted line as our preliminary estimate suggests to us.
And that would be the case probably, or the forecast for the next 2 quarters as well, Mr. Mundra, for the first half of the new year?
Well, very interesting question. Of course, you bank specific, we expect, yes, that would be the scenario. But to my mind, this coming 2 quarters or 4 quarters there will be 3 things which will be broadly defining that how these quarters are panning up. Number one, as you know, that the Basel III draft guidelines are announced. So how the capital management has to take place. Government has also announced additional borrowing program. So how the liquidity is to be deployed, and the investment pipeline, which had not built up much in the recent months. And going forward, if the atmosphere is more benign and this pipeline starts building up, it would reflect more in the later second half of the next year. So I think these are the things, these 3 things which are going to define the shape of banking activity which is going to happen in the 2012-13.